Special Reports is a daily show that will cover issues surrounding the economic collapse. All our reports and daily alert news are backed up by source links. We work very hard to bring you the facts and we research everything before presenting the report. Subscribe for latest on financial crisis, oil price, global economic collapse, dollar collapse, gold, silver, Bitcoin, global reset, new world order, economic collapse, economic news, political, geopolitical news. Today, we talk about Fed may bring down the economy, crash markets, Gerald Celente. One of the hot topics in the markets today is the escalating trade tensions. Trump just announced another $200 billion in tariffs on China, and he looks ready to more than double that if the Chinese should retaliate. The president is confident the U.S. can win a trade war. Do you share that optimism? How do you see this playing out? I absolutely share that. Because here's the deal. If you or I were to do business, and I'm making $350 billion more than you are you going to want to renegotiate this? Hey listen, something's wrong over here. So, when you look at even with the tariffs that Trump is putting on, that still amounts to a very small percentage of China's GDP, about 0.3% or something like that, 5%, 6% tops. So China's going to negotiate. They're not going to give up a very lucrative business deal so they could keep making more when the other business partner wants a better share. And how do you see the escalating tariffs impacting markets? So far the response appears mixed. The dollar seems to be benefiting, and metals are suffering. We aren't sure the markets have it right when it comes to the dollar though. It seems to us that tariffs should drive price inflation. Either Americans pay a higher price for the imported goods, or replace them with more expensive domestic products. But Chinese aren't likely to be buying as many dollars or treasuries if exports to the U.S. fall, to say nothing of their ability to wage an all-out currency war against the dollar. But so far, at least the dollar is getting stronger in foreign exchange markets. What are we missing? Well, I think what people are missing is they're making too much of a deal of the trade war. It's every day. It's almost become stupidity with the business media. Every day they're going, the market goes up because trade wars eased. The market is down because trade fears increased. Come on. What are they kidding? The world is bigger than that. Even what you saw car sales start slumping in China, the headlines blamed the trade wars. Does the average person give a damn about a trade war? They're buying what they're buying, they got what they got. If they don't have it, they don't spend it. If they have it, they spend it. They don't know what's going on behind the scenes and the details of a trade war. The media has dumbed down so much it's every day. It's one excuse. And as far as the dollar going up, it's interest rates. The United States is raising interest rates. You're looking at what? Even with the United States raising interest rates, what are you looking at the overnight? The Fed funds rate? 1.75 to 2. And what is it? 1.5 in Canada, and the UK. Negative interest rates in Europe, and the European Union. Negative in Denmark. Negative in Sweden. Negative in Japan. It's ridiculous. So what I'm saying, Mike, is that the markets cannot take a rate increase. That's why the currencies are going down. And matter of fact, we just heard from the number 2 guy in China, Li, saying that to think that the Chinese, he said, want to devalue our currency is ridiculous. He said we're not going to make up that much more trade on having our currency decline. Because by the same token, you look at China, what are they? The largest importer of energy in the world? And now the yuan is going down, and oil prices are going up. Oh, and what are oil prices based on? Petrodollars. So now as their currency declines, they got to input more energy. And it's based in dollars. As the dollar gets stronger, they don't want this to happen. So to me it's a lot of misinformation out there. And again, I'm no Trump fan. I think the guy is ridiculous on a lot of stuff. But the media is so anti-Trump that they'll keep using one play a day and overlooking the bigger story. Prior to the 2008 financial crisis, the emerging markets were the ones who were hit first, and that rolled over to the US. Today we are looking at a potential repeat, and the strong dollar has the potential to really hurt emerging market economies. You just alluded to that in your previous answer. Is that the trend you're watching most closely here, Gerald? the health of the emerging markets as potentially the first domino to fall that leads us to the next economic crisis, perhaps. Talk about that. The emerging markets are the symptom. Again, the cause is a dollar. The dollar has no competition. As I mentioned, you're looking at negative interest rates in Europe. The dollar gets stronger, it's not because things are so great. What do we have? A $21 trillion debt over here. And when you put the real debt levels into it, it's over 200 trillion. Social security, pensions, etc. So the reason the dollar is getting stronger is the Fed's raising interest rates. The world cannot take rising interest rates because the whole recovery was built on cheap money. So what we're saying is that when the Fed raises interest rates too much, when emerging markets currencies slump too low, that's the implication, the symptom of the cause. And that's going to bring down, that's going to be the contagion. Another one, look at the Indian rupee. It's at an all-time low. Fell 14% this year against the dollar. 80% of the energy is important in India. So now you're looking at a declining currency, oil prices going up, and a slowing economy. So now what we're looking at is oil. Oil and interest rates. The ratcheting up of war in the Middle East. You just saw what Israel, a release came out last week, that they've sent it over, something like 800 missiles into Syria, over the last year, according to their intelligence agency. Several hundred? I'm not sure the exact number, I forgot it. And then what happened with the Russian plane just getting shot down, as Israeli jets were allegedly firing missiles into Syria, and the Syrians shot back, and they also hit the Russian plane, killed 15. And then there's the sanctions going on against Iran, and that's going to drive oil prices up even more. Here's what we're saying, if oil prices hit to $100 a barrel, and now they're floating around the $80 mark, you go back to the last 5 recessions, Mike, all of them were preceded by rising oil prices. I just put the whole scenario together, with the rising value of the dollar, the more it's costing them to buy the energy. So now, with sanctions going on in Iran, and supposed to be taking very full effect in November, with the oil sanctions, that's going to cut back on supply. And the word has it, from what I'm reading, is that OPEC, and non-OPEC nations, including Russia, Saudi Arabia, and the United States. OPEC of course is Saudi Arabia, but the United States and Russia aren't. They're not going to be able to make up the loss for what they're going to be sucking out from Iran. That's going to drive prices up higher. So that, plus war fears, plus rising inflation, then we're saying gold is the ultimate safe haven asset. And you well know we've been saying, well over almost 2 years, that gold's bottom is around where it is now, $1,200. 30, 40 bucks one way or another. But this is what we've been saying. So, when these tensions heat up, that's when you're going to see gold prices spike. Getting back to the interest rates here for a minute, how do you see this battle between the Fed and Trump playing out? The president has been very critical of the Fed's tightening of monetary policy, and their decision to forge ahead with rate increases. Do you see the Fed digging in here as they try to assert their independence? Or do they end up caving in and going along with his preferences for low rates? It's hard to say. You go back in past years, Nixon administration, he pushed power onto the Fed to do what he wanted. So it's hard to say. You don't know what goes in on these deals. But what everyone should really recognize is the failure of the Fed over the years. You talked before about the panic of 08. A term that I coined in 2007, took the domain name out. And I was going totally against what the Fed was saying. They were wrong on everything. And they're wrong now. And again, this country cannot take rising interest rates. Oh, I just mentioned rising oil prices, right? So now the tax cuts for the middle class in America, that Trump gave the middle class, half of them are eaten up already by rising prices at the pump. So what I'm saying is that the Fed is overestimating the power of the economy. Real wages have only gone up because, do you know why? People are working longer hours and holding more jobs. So they're overestimating the power of the economy. If they raise rates too much, it's not only going to bring down the economy, it's going to crash the markets. Getting back to metals here for a moment. It seems like right now all the winds are against higher prices. Interest rates are rising. Stocks are rising. The dollar is getting stronger, as we talked about, at least relative to other currencies. It would be hard to find a trader on Wall Street who is buying safe haven assets right now. That's a tough combination for gold and silver bugs. But we know that all of these conditions don't normally go together. At some point you'd have to think that rising interest rates are going to cripple growth, as we talked about. And the risk is going to return to the markets one day. Do you see investors being given a reason to buy precious metals anytime soon? Or are gold bugs going to have to tough it out for a little while longer? People playing the market and people investing in gold are two different stripes. And I began my career back in the late 1970s, and very few people were doing it, trading gold. Then I became a buyer of gold, rather than a trader. So if you're buying gold, it's for the long term. It's still the ultimate safe haven asset. We just ran through the currencies. The currencies aren't worth the paper they're not printed on anymore. I mentioned $250 trillion worth of global debt. So, gold the people that buy it, and I don't give financial advice, I'm a trend forecaster. We're saying it's the ultimate safe haven asset. And there are very many good reasons to have that asset. Because again, yes, the strength of the dollar, but there's a whole world out there. And their economies are in very serious trouble among a number of nations. Again, you're looking at currencies hitting record lows, against the dollar and slash, or back into very terrible territory. Look, if you lived in Argentina, what do you got? 65% interest rate charge. You lost 40% on your peso. In a year, what would you rather hold? Pesos or gold? Oh, it's expensive. Yeah, but you're losing money on everything. So, there's going to become a point when these currencies decline so much that people will do anything they can not to lose the value of their currency, and the smart money we believe is going to go into gold. That's a big reason why we like having you on. You have a global outlook. Obviously, there's a lot more going on than just here in the States. And that's a very important thing for people to keep in mind. It is a big world out there, and there's a lot of people that do still recognize the safe haven value of something like gold. Now, as we begin to close here, is there anything else you're focusing on as we head into the November elections and the final months of the year? Anything that you're keeping an eye on that maybe we haven't discussed that need to be on people's radars? Yeah. We think that Trump is going to play another peace card, possibly with Afghanistan. We're going on, what? It's going to be an 18-year war. And no end in sight. And there's just a dump of money going into it. And also, probably pulling out of Syria, and more positive peace deal with North Korea. And we believe that's going to happen before the midterms, to give the Republicans a boost. And he's even speaking out more and more about the useless wars in the Middle East. And matter of fact, that's the lead story in our new Trends journal that just went out. And that it's America's love of war and hatred for peace. And how it's really hurting this country in so many different ways, financially, as well as morally. They say the fish rots from the head down. So, if you have a leader that says Assad has to go, Gaddafi has to go, Hussein has to go, what's the difference from 6 sub in school saying, my classmate has to go? I mean, if I got some of you watching your leaders murdering innocent people that have done nothing to us, poses no threat to us. The only threats they said were based on lies, that are facts. But of course the white shoe boys and the political criminals, now they get brought up on charges. They misspell the word justice, it should be just us. Because we're the only ones that pay when we commit a crime. So, what we're saying is that, yes, we believe there's going to be a big play, and it's going to be a midterm play, and it's going to be for peace. Because most of the people, they don't follow the media lines, or the political lines. They only follow their heart and soul. And so, people really want peace, but the media, and the politicians sell war. And Trump, as you can see by his comments, is not for it. So we believe that that's going to be a positive, and also that's going to be positive for equity markets as well. That'll be something worth keeping an eye on. Well, great stuff as always, Gerald. Thank you for your time. Now before we let you go, please tell listeners how they can get their hands on the great Trends Journal information there, and anything else that you're putting out at the Trends Research Institute. Well, the Trends Journal used to be a quarterly when we began in 1991. And now it's a monthly, and we also put out trend alerts each week. Trends in the news broadcast Monday through Thursday, and money back guaranteed. It's only $129. But it's the only place where you're going to read history before it happens. Somebody just bought Time magazine and made a big deal out of it. Time magazine, last week's news tomorrow. So what we're doing is we're giving you tomorrow's news today. Thanks for watching. Tell us what you think in the comments section below.